You're probably looking into investing in syndications and private placements as an accredited investor, or maybe you're already attuned to the jockey and the horse analogy. This is what I call the horse and the jockey analogy 2.0. The people, the operator is the jockey and the horse is the deal. So a lot of people, they'll start off and they'll go through that syndication e-course, which if you want access to that, just shoot our team an email, team@thewealthelevator.com, and we'll get you set up there in the portal. But they'll go through that e-course and it's pretty lengthy. And especially the number section where we go through the reversion cap rate, what's a good assumption for full occupancy. They can at least sniff out the garbage deals, the sucker deals out there. The next thing that people will get to is the bonus section, which is the nice little rubric, the due diligence checklist, which weights a lot of these aspects in a composite score to evaluating the deal as a whole. But most people get to a holistic point where it's like, all right, I know a lot. I'm a lot more confident now. I at least know a lot of things I wasn't even completely aware of initially. And I feel comfortable with this. At the end of the day, the syndicators, the operators, they have skin in the game. They don't make money unless we make money. And if you work with honest people, it's a kumbaya situation. And that's why I like the whole spirit of these deals that are structured in a way where the GP gets a share of the upside, right? So they're incentivized to perform. People go to the syndication e-course and most LPs will be like, all right, I just got to work with honest people, join the family office on a mastermind group to figure out who those honest people are. And that's just where they're like, all right, I can somewhat vet the deal and the people and the analogy, the people, the operator you're going to be working with is the jockey and the horse is the deal, right? I've been given some tools to evaluate the horse and the jockey. And there's people are in different camps. I'm a little bit more neutral in terms of some people think that the horse is more important, right? If you have a deal that is under market rents by $300, $400 and you've got a very clear value add strategy, you can have an idiot running that horse. As long as that idiot is an honest person, doesn't steal money, and this race is going to go fine. Other people who are less comfortable with the numbers, I think that maybe this is the consensus out there that people say the jockey is more important, the operator is more important. I think people say that because they're just not able to even understand the numbers on a cursory level. Therefore, evaluating the horse or the numbers or the deal in this analogy, they don't understand. So they're going to focus in on what kind of makes sense to them and what is the statistics on the jockey or the operator, right? So, in my opinion, I think you look at both. And I've always said what I used to do is I would focus on the deal first because I can evaluate the deal. Then I go look at the operator. And you can ask the operator a gazillion questions. It's just all going to be lies at the end of the day. At the end of the day, you need to meet other purely passive accredited investors. And that's why you join like a mastermind like ours to figure out who are the legit operators out there other than the manufactured real estate groupies and gurus out there. But I'll introduce where this analogy goes 2.0, other than the horse and the jockey, you also have the track, which is indicative of the market. Most times it's a good time to be racing out there. It's sunny, you have a bit of a trade winds at your back. And that was indicative of the market in 2010 for more than a decade to 2022. And then in 2023, that was when you had a huge correction. In my next quarterly report, there was an article in commercial real estate. Commercial real estate got hit harder in 2023 than in 2008. Now, not many people talk about it because in 2008, the big thing was the single family home residential world, where the commercial real estate really didn't have the huge impact it was today. That speaks to commercial real estate went through its biggest correction in the last, 3 decades here. So now's the time to be getting in. But even if you picked a good horse and a good jockey, because the track wasn't good, this is another aspect that you as an investor need to evaluate. And the way to get around this is just to constantly dollar cost average, like how they teach you in the traditional investment world. Constantly be going into deals and spanning over 4 to 7 years. Personally, that's how a lot of our deals made it through as a portfolio because we were investing and established before the 2023 market correction. And That's what I would urge all passive investors to do and diversify. Don't just go into one, two, three deals. You got to get into a lot more. There's a fourth aspect to this, which is the guys in the stable, the guys who take care of the horse. And in this situation, the investor base that are investing in the deal, not many people talk about the guys back in the stable who take care of the horse, nor when people evaluate a deal, they take a look at the passive investor base. A lot of these deals these days that a lot of you guys see are put together by retail type of investors, guys that don't have the ability to put in money in a capital call to be able to get the deal to where it needs to be. Obviously, on the opposite end of the spectrum, institutional type of deals where little private investors are not able to get into, this is where their advantage comes into play. Seemingly an infinite amount of money to put into a deal to right sizing and set the sales to better days. But this is where we've consciously as a group, especially as we move into more other asset classes outside of multifamily, to get involved with other partners where the passive investor base is a lot stronger than your typical retail investor base out there. Why? Exactly what I'm saying. When a storm comes, the passive investors can do their equity commitment and bridge the deal to the other side. Because the nice thing about real estate is the price doesn't go to zero, unlike a stock. The equity may dip 20%, but the price doesn't really go back down to zero. So if you're able to get into these deals with that next level people where the investors are maybe about $5-10 million at least, and you're in these situations where you're able to, if there's trouble, somebody just writes a few $1 million check and we're off on our way. And what I call this kind of rung is the semi-institutional family office type of level, where experienced operators who've done well over $1 billion of assets under ownership, and their investor base and the ownership group is well capitalized to get over these types of humps. And this is where I would say in past 2020, we as a group have graduated to, we've gotten access to this type of level of deals out there. So that's the analogy. You got the horse and the jockey, you've got the racetrack, and this other aspect of deals. And I think you guys are going to start to see this come out in some of the deal opportunities that are coming out here and some of the income fund opportunities too, right? Access to better operators. And just to give you a sense, right? A lot of these operators, you may want to think about investing directly. And yeah, if you want a connection, we're more than welcome to give it to you. But a lot of these guys won't want to mess with you unless you're investing more than a $500,000 check, right? Because they just don't want to deal with retail type of investors who won't have less than $5 million net worth that are going to give them a hard time for their $100,000 investment. And those are the people that we want to work with in the future, not the passive investors, but in terms of the operators. Think of like a semi-institutional industrial operator or a assisted living operator. There's a lot of these guys out there that have done this for years all by themselves, and they're well capitalized as an operator. And if we're able to work a deal with them where we can bring in our investors as one big check, that's where we're going to get access to these great operators who, sure, they don't like talking to passive investors, but this is where you're able to get access to better deal operators and better deals and get out of that world of operators operating with less than $1 billion of assets under ownership.